What's up, guys? So in today's video, we're going to talk about Tesla stock. So Tesla stock has recently taken a downturn. I talked a bit about how I said there was that great resistance point at around $750. So if you're currently looking at this day-to-day chart, we're just going to do a quick recap on what took place. So as you can see here, the stock is down 6%, and I think a lot of people wanted to take some profits because the stock was kind of hovering in that $700 range, and we just moved up so fast from that lower point. So I want to show you guys a little bit longer term chart here. So as you can see here, we were around that $400 range, and the stock hit resistance at around $770, something like that, $750, $770 level, and it looks like we've had a bit of profit taking. But there has been support at around $686, which is a good sign because we still have earnings coming up. So what is going to be taking place for Tesla stock? Well, guys, I've been reading some crazy articles out here, and I thought that it'd be a good idea to give you guys a kind of a unbiased opinion on Tesla stock. So if you guys been following my Tesla videos as of late, you know I'm extremely bullish on the company. I believe the stock will trade at about $3,000 by 2025. But apparently there are some opinions out there that think I am in the wrong direction. So I want to show you guys a really interesting article that I found. It says low oil prices could send Tesla stock crashing 90%. Yes, 90%. So he says, who wants an electric car when oil prices are dirt cheap? One analyst believes cheap gasoline will send Tesla shares to double digits. So guys, this is a pretty crazy article. I don't know if this is satire or not. I believe this has to be some satire or something like that. But basically, it says Tesla faced a perfect storm of low oil price and massive competition. One Wall Street analyst thinks challengers will send the company's stock to $70. It says he blames Tesla's recent rally on ignorant Chinese retail investors instead of attractive fundamentals. So basically, it talks about how the stock could fall as low to $70, guys. Yes, $70, which would make the stock price crash basically 90%. So basically what he's saying is that consumers are attracted to value. They want the best value at lowest price. For many auto buyers, the price of gas at the pump will determine whether they buy an electric vehicle or their gas guzzling counterpart. That's why historically low oil prices are an essential threat to Tesla and the electric vehicle industry as a whole. So as you guys probably, if you guys didn't know, West Texas crude oil prices have dropped like negative, so you actually have to pay money to sell it. So there's been a huge problem with oil demand. Has been at just a very, very, very low number, and the reason is because up to 70% of all gasoline consumption is with people driving their cars. And with the global quarantine and not a lot of people driving out there, you're seeing a lot of gas stations. You guys take a look around where you live and stuff like that. A lot of gas stations are empty. No cars coming in really. So that has put a huge, huge damper on crude oil and things like that, because they have all of this crude oil that they've taken out from the ground and they really have no one to sell it to. So as you can see here, it says the average gas price in the United States is already $1.77, with some places as low as $1.25. So the reason why he says that Tesla stock went up in the first place is due to Chinese retail investors pumping up the company. But I disagree with that. I think that a lot of the stock has grown because Tesla recently released those awesome Q1 numbers where they said deliveries were up and production was at a record high in Q1. But as we continue reading, it says Tesla recently opened a new factory in China and quickly became a dominant player in the country's electric vehicle market, selling 10,160 cars in March. So obviously a lot of people in China were buying this, but he says Johnson believes Tesla is overvalued and compares the company's market cap to Volkswagen, the world's largest automaker by sales volume. Tesla has a market cap of 127 billion compared to 70 billion for Volkswagen. Although Volkswagen sold 10.5 million cars last year, while Tesla only sold 367,000. So some interesting points here. So as he says, he talks more about their new car variants, but how their sales only increased 5.5%. And then it says he's made a name for himself, predicted doom and gloom for Tesla, but the stock has continued to rise. So guys, obviously if Tesla shares fall to about $70, that is going to wipe out a lot of investors, including me. So guys, I'm going to give you guys a more my point of view on Tesla, and I understand where this article is coming from. There are a lot of interesting points there talking about the dropping oil prices and the fact that Tesla is reportedly overvalued compared to Volkswagen and things like that. But I want to give you guys some hardcore numbers on Tesla to kind of back up why I think that Tesla stock is going to 3,000. So there's a couple of things that basically okay, so there's a couple of things that this analyst missed in the article, and the first thing I want to do is I want to talk about Tesla's compounded annual growth rate. So guys, this is one of the key metrics that I like to look at. It removes all the noise when I'm buying a stock or not. Simply, is the stock returning value to shareholders? So I'm going to pull those numbers up. Okay, so as we can see here, I'm in Morningstar.com, guys. You can simply go to Morningstar.com, type in any ticker symbol in the search field, search box, and you can pull up these numbers on trailing returns. So why am I looking at trailing returns, number one? Well, the first thing I want to do is I want to look big picture here. I want to think long term. Low oil prices will only be low in the short term. Obviously, no one is driving. There's no demand for oil. But when people start, going back to work, when people start going to malls, when people start going back to school in the fall and things like this, of course, people are going to be driving, so oil demand is going to increase. So the low oil prices is a short-term thing. But now let's look at what Tesla's been doing over the long run. Over the last 5 years, Tesla has returned 26.81% annually. That's including this whole coronavirus basically sell-off. As you can see here, the stock is actually down around 3% over the last week. Is up 64%. So what is going on is there's actually an inverse relationship between Tesla stock and the rest of the auto manufacturers. So as you can see here, the average auto manufacturers is basically traded flat over the last 5 years annually, while Tesla is up 26%. So the reason this is happening is because there is a shift. And I don't think this article is addressing the shift that's going on. We're always in transition periods. So for people that are interested in buying cars now and things like that, yes, Volkswagen sells a lot of cars, but a lot of the cars Volkswagen sells are going to be banned in Europe in the future anyway. So I want to show you guys a really interesting article that basically says Europe is thinking about banning all gas-powered cars, and you have to have an electric car in the future. Okay, so I just want to quickly run through this article, guys. So it says a ban on fossil fuel. This is posted by Transport Environment.org. It says a ban on fossil fuel cars is now on the EU agenda following an informal debate by environmental ministers that showed significant support for the idea. So if you guys take a look closely, it says that the rapid growth of electric vehicles and renewable sources of energy, with which to charge up e-vehicle batteries, has meant a phase out of internal combustion engine is now in sight. The internal combustion engine is now in sight. The Netherlands, Norway, France, UK, Sweden, Ireland, others have already announced plans for a phase out between 2025 and 2040. Cities across keen to wean themselves off polluting cars, with London, Paris, Amsterdam, Brussels all wanting to ban conventional cars by 2030, 2035. So all of these cars that are sold by Volkswagen, all this stuff, all of these cars are going to be obsolete. So what really matters in the long run is who is going to be selling the most electric vehicles. And the difference between a company like Tesla and a company like Volkswagen is that Tesla is focused. They only sell electric vehicles, whereas Volkswagen and all these other car companies, they have huge budgets and huge marketing teams and engineers all focused on right now, which is still making gas guzzling cars. And then in like 5 to 10 years, they're going to have to completely scrap all of these cars, and all of these cars are going to become absolutely worthless. So for me, it just seems ridiculous that you're not going to invest in a car that is super focused on electric cars. That's all they make. They make zero fossil fuel, gas guzzling cars, where all of these other companies are basically in catch up mode. So I think that this article is a little bit preposterous. I think it has some valid points, but I think it doesn't really address the kind of, you would say, the canary in the gold mine problem with a lot of these companies whose sales are going to absolutely plummet when consumers realize that potentially buying a gas guzzling car, it'll be almost illegal to drive. And that's just in Europe. So if Europe implements these changes, we're going to see a lot of this stuff happen. Obviously, it's going to be slower to creep in terms of like Latin America and Asia and Africa and stuff like that. But that is where we're going into the future. So now if we take a look at Tesla stock, we see that right now we're waiting for earnings to come up on April 29. So where do I think the stock is going temporarily? Well, I think a lot of the sell-off was due to just the Dow Jones and just the S&P 500 going down in general. So if I can show you guys a transplant, basically the movement of the S&P 500. Okay, so obviously the markets were down in general and Tesla was a bit sold off. Obviously there was some profit taking, but that just doesn't take away from, I think, the long-term potential. But there are some short-term risks here. So as you can see here over that daily chart, there was some nice support at around, as you guys can see here, there's some nice support around $680 or so. And some of you guys left in the comments that you actually took profits at 700. So congratulations. But for me, I'm thinking super long term because I'm constantly reading these articles about the ban on gas guzzling vehicles and 2025, 2030. And I want to take part in that long term ride. So for me, what I'm doing right now, I'm waiting for earnings. I think earnings is very important for Tesla on the 29th, and I'm going to hold on to my position. But if some of you guys, you bought early and you want to take some profits, I can completely understand this. But I can give you guys an alternative for you guys out there that are long-term shareholders like me, and maybe you're a little bit, you're a little bit wary, you're a little bit afraid of what could happen to Tesla stock. Maybe it's going to continue to dip. So one way that you can hedge your position is you can simply buy put options. So what are put options? I'm going to talk a lot more about put options in some future videos because it really deserves its own separate video to explain it. But basically what a put option is the right but not the obligation to sell a stock at a certain price. So if you want to hedge your position, and when I mean hedge your position, I mean basically buy an insurance policy just in case the stock crashes. So for some of you guys here, you've obviously seen the stock coming down, and like I was saying earlier, we could see a little bit more short-term downward movement as it seems like the stocks have been selling off the last couple of trading sessions, Monday and Tuesday. So what you can do is you can simply buy put options at a certain strike price. So let's say you wanted to make sure you want to sell your Tesla stock no lower than, I don't know, $650, for example. That seems like a decent place if you wanted to protect your gains because we're already down from around 760. So what you would do is you would simply buy a put option at the strike price of 650, and then what that means is that you are able to sell that stock at $650 if the price ends up falling below it. So if Tesla stock doesn't fall below $650, then your options will basically expire worthless and you just lose the premium. But if for some of you guys out here, I know some of you guys have a lot of money invested in Tesla, you probably don't want to see a big drop. So I think put options is a good option, guys. And definitely do some more research on it. I'm going to post a video very soon on buying put options, a great way to hedge your positions and something that all of you guys should be doing if you have a lot of money invested. Now, maybe if you have one share or two shares or something like that, but if you have maybe 10 shares, 20 shares, 50 shares, 100 shares, you want to try to hedge your positions because you have a lot of money invested and you've already made some great gains over the last couple of weeks. You want to lock in those gains. So I hope this video helps you guys. I hope it gives you some food for thought. And I'm going to be posting some more videos on Tesla because I think it's really interesting stock moving up until earnings. So I'm going to keep you guys posted on what's basically going on, probably on almost a daily basis because I think this earnings is going to be historic for the company and I'm really, really excited. I'm really bullish on electric cars in general. And I haven't been talking about the solar energy component of Tesla, which again deserves its own separate video. I'm going to make a video on that as well, guys. So if you enjoyed this video, please give me a thumbs up and subscribe to my channel. I post videos on the stock market every day. And be sure to leave a comment. Where do you think Tesla stock is going? Do you think it's going lower or do you think it's going to rebound in tomorrow's session? Let me know what you think. So until next time, guys, take care.